Good morning, everybody. Mike Vacchi, Princeton Trader, here with your Friday morning pre-market webcast. Okay, daily chart. What are we looking at? You're looking at 1, 2, 3, 4, 5, 6, 7, 8 days of an upper band ride. And you're just starting to see now the Bollinger Bandwidth is at 3.37. So over the top of 3.0 is always the area where you're looking at the bands expanding beyond price. So should price come back inside the bands? Absolutely. Does it have to do it today? No, not at all. So we've spent 2 days interacting with the third standard deviation upper band. They took it as low as 2175 early yesterday morning when I did the wrap-up video and talked about it getting long there. The bears have no real traction at all until they take out a prior day low. So if they can go down and break 2621.75 today, it's going to get everybody's attention. For now, they've done as much as 31.25. We're trading 45.75 as I'm taping this. It looks like just another dip. Now, the bulls are not off the hook. The bulls have got to deal with this very toppy looking candle here that goes as high as 26.58.5. They've got to take that out. If they don't, then you're going to have every short seller with a dream is going to start leaning on this thing and trying to take out the prior day low. Now, the ability to take out that low is probably, they're going to have to save that probably until Monday or Tuesday. A low of 31.25 is a lot easier to deal with than a low of 21 and change. So we hop over onto the hourly chart. It's the same old, same old. Bears need below yesterday's low. The bulls need the higher high. I mean, you got this liftoff candle that they walked back. They did a little bit. This is pretty promising, actually. They were climbing along the hourly midband. Bears broke it down a little bit, but you can see they've got it all back. So what the bulls are going to want to do today is make sure on the short-term time frames that they stay above VWAP. As long as they stay above VWAP, volume weighted average price, which right now is coming in about 26.40 and change. As long as they do that, and that coincides with the daily pivot, as long as they stay on the right side of that, then the dip buyers are going to continue to buy this thing. If the bears want any momentum at all, that momentum starts below 26.40, and then it's got to result in breaking the 31s from last night. All right, so I'll tell you again, same thing I told you when I did the video last night. This is not an environment to fight price. You can be long and go with it. You can be flat and frustrated. Being flat and frustrated is free. Being short and fighting it gets very expensive very fast. Don't think for a minute there are not people that fought this thing for the last 100 handles, all the way up from 25.55 half to 26.58 half. 103 handles is a lot of pain. If you look at when we got long Sunday, Monday, down in the 97 area, that's 60 straight up. And the only real give back was here. You had a little bit here, but that was just a channel day, remember. You had daily upper band support, third standard deviation upper band. So maybe one more day in the channel, then we start to come back in. But here's your 55 half. Don't fight this. There will be a time to get short, and there'll be a time to get short positionally. But for me, the time to get short positionally is when out on that daily chart, you start to see prior day lows get taken out. All right, everybody have a good one. I'll be out with a midday update. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.